In this ongoing series, we will be building a diversified total return TFSA all the way from 0 to 100K. Hold on to your seatbelts, folks. This is going to be a good one. We began 6 months ago with that first $500 deposit to start a brand new TFSA. We will be adding another $500 this month for a grand total of $3,000 invested thus far. With every month, we are taking another step on that journey to six figures. We are now moving into 2024, and with that, there will be new market challenges and opportunities as we continue to add to the portfolio. With rate hikes being a thing of last year and the potential of possible rate cuts later in the year, we're going to experience a very interesting year, and it may very well make for a good time for your portfolio. From that portfolio's perspective, there is something to take away from this. For example, if rate cuts are coming in the second half of 2024, who is going to benefit from that? Real estates and financial sectors are looking to do really good. That could guide a few of the purchases we make. In fact, REITs may be looking at a lot of recovery growth in the second half of 2024 and, well, also into 2025. I have a pretty good feeling that this is going to come into play with our picks this time around. Should I have given a spoiler alert for that? Join the conversation. Let us know in the comments if you are excited for investing in 2024. Your participation is, of course, well appreciated. Don't forget to like and subscribe to stay up to date on the future content. And a huge thank you for that click. As this series progresses, we will be adding new statistics and beefing up the ones we already have. This is going to be simply awesome. So far, we have invested $3,000 into this portfolio, and I simply can't wait to check in on how the stocks are doing. We will start by looking at our current lineup and any changes we made to them. We will start with Alvo Petro Energy with a ticker of ALV. We did not add any more shares this time around, and thus we are sitting at 20 shares. Their average or adjusted cost base, that comes in at $8.09, and their current price at time of recording was $6.60. They just had their ex-dividend day, and with a huge yield, we did expect a good drop in their share price. We were not disappointed. We currently do not have any divs. Now their return on investment, and this is that big drop I was talking about, negative 18.42%, and we get a total return of the exact same negative 18.42%. Yikes, this is a big drop, and they may have just secured the Toad Award for worst stock of the month with that one. Their yield comes in, and I did say it was high, it's 11.354%. And as I said, we did pass the ex-div date, so those dividends are dropping January 15th. I still feel good about this stock, but let's definitely reevaluate it in another month once the stock has had time to recover. Up next, we have Alimentation Couche-Tard, tickered ATD, and they are still sitting at 3 shares. So we have an adjusted cost base of $75.86, and their current price comes in at $78.03. We did get our first dividends for Couche-Tard, and that comes in at 53 cents. Their return on investment in the green, 2.86%, and factoring in the dividends, we do get a total return of 3.09%. Their yield, not one of the bigger ones, this is more of a growth stock. Their yield comes in at 0.897%, and the next dividends for these guys, around the end of March. This continues to be a stock that I do have some pretty big expectations for. Our next stock is Brookfield Asset Management. We did not add to our position this time around, so we're still sitting at 5 shares. They have an adjusted cost base of $45.74, and their price, nice looking $53.22. We did receive more dividends. We actually got $2.14 in dividends this time around, bringing the total dividends up to $3.01. Their return on investment, a very nice looking 17.54%. Add in those dividends, we get a total return of 18.86%. Holy banana bread. I like that number. Their yield comes in at 3.755%. And as for their next dividends, we're looking at the end of March for them as well. BAM simply had a huge December, and they are in contention for our GOAT reward this month for sure. Next, we have Scotiabank. And this time around, I did buy one more share to bring our total up to 7. We've got an average cost base of $61.67. Their price comes in at $64.50. So far, we've received $3.18 in dividends from Scotiabank. That puts their return on investment at 4.59% and their total return at 5.33%. With them having a pretty good month, their yield actually came down a little bit to 6.574%, and next dividends from these guys are coming out at the end of January. It was definitely a green month for Scotiabank, as that rate pause is looking good on some of the banks for sure. Up next, we did not add to our Canadian Natural Resources position. CNQ still sits at 2 shares. They have an average or adjusted cost base of 81.95. Their price comes in at $86.81, and so far we've received $1.80 in dividends from CNQ. Their return on investment, that comes in at 5.93%. Add in those dividends, we do get a total return of 7.03%. Their yield comes in at 4.608%, and they do have a quarterly dividend. The next dividends are actually coming in, well, within a few days, January 5th. CNQ was still in the green and looked good in December, but they did take their foot a wee bit off the gas, that's for sure. Moving over to Canadian National Railway, ticker CNR, we held our position steady at 2 shares. We get an adjusted cost base of $151.74. Their price comes in at a very nice looking $166.55. We did just add some dividends too. We received $1.58 in dividends this month around, so it brings our dividend total up to $2.37. Their return on investment looking good, CNR, 9.76%, and they've got a total return of 10.54%. Their yield, not huge, it's 1.897%. This is a quarterly dividend, so we are expecting the next dividends at the end of March. CNR had a very good month in December, and there is nothing too shabby about a double-digit total return. The next stock is Decisive Dividend Corporation. We did not add any more shares this time around, so we're still sitting at 16. They have an average cost base of $8.48. Their price comes in at $7.97. This time around, we did add another 64 cents of dividends, bringing our dividend total up to $2.36. Their return on investment comes in at negative 6.01%. Add in the dividends, we get a total return of negative 4.27%. Their yield, it does come in at 6.023%. It is a monthly dividend. Their next dividends will be coming out in the middle of January. Definitely a little improvement last month, and hopefully we can see their total return back in the green by, well, maybe February. Up next, we added another 4 shares to Canoe EIT for a total of 25 shares. Their adjusted cost base, $12.88. Their price comes in at $12.92. We received another $2.10 in dividends, bringing our total dividends up to $4.10. Their return on investment, that comes in at 0.62%. And factoring in all those dividends, we do pump that up to a total return of 1.90%. Looking good, Canoe. Their yield comes in at 9.288%. It is a monthly dividend, and the next dividends, well, they're coming out middle of January. Good old Canoe is back in the green and a pretty nice source of reliable income each month for the portfolio. Fortis is up next with a ticker of FTS, and we did increase our position by 1, moving up to 3 shares. Our adjusted or average cost base comes in at $55.17, and their price comes in just a little lower at $54.51. Now, we did receive our first dividends from Fortis, $1.18. Their return on investment, that comes in at negative 0.60%. But those dividends do push them back up into the green. We get a total return of 0.12%. Their current yield is sitting at 4.329%, and their next dividends come out on the 2nd of March. It will be great to see our dividend king move us a little deeper into the green, that's for sure. The next stock is Hammond Manufacturing with a ticker of HMMA. We didn't add any more shares to them this month, so they sat tight with 15 shares in total. They have an average cost base of $7.60, and their price comes in at $8.19. So far, we have received 18 cents in dividends from them, so their return on investment, it still looks good. It's at 7.76%. Total return after we factor in those dividends, 7.92%. So their yield is 0.733%. It is a semi-annual, so they only dish out those dividends twice a year, and the next time should be around the end of February. It hasn't been declared yet, so hopefully by the next update we'll have an exact date for you. Hammond is looking a little better last month. They may not be ready to take back the GOAT title, but they also shouldn't be underestimated. I really do like this company. Up next, we have Open Text with a ticker of OTEX. We did add 1 more share, increasing our position to 3 shares. We got an average cost base of $49.58. Their price comes in at $55.69. We also received 68 cents in dividends, so we got some dividends on the board now for Open Text. Their return on investment, 12.32%. Factor in the dividends, we get a total return of 12.3%. 2.78%. They have a dividend yield of 2.484%, and it is a quarterly dividend. We're expecting to see more dividends from these guys around the end of March. Another strong month for OpenText, and unfortunately it does look like they lost the go award this month. Well, maybe they'll be back to challenge for it next month. We'll have to see. We added one more share to Stella-Jones, ticker SJ, for a total of 3 shares. They have an average or adjusted cost base of $81.75. Their price comes in at $77.12. They did receive some dividends this month, 69 cents, so that gives us a return on investment of negative 5.66%. Factor in those dividends, we get a total return of negative 5.38%. They have a yield of 6.994%. It is a quarterly dividend. We're expecting to see more dividends from them at the end of March. They have dipped into the red for December, but I have a feeling they're not there for a long visit. We added one more share to Sir Royalty, ticker SRV.UN, for a total of 11 shares. They have an average cost base of $16.40. They received 2 sets of dividends this time around. 95 cents at the beginning of the month and $1.51 at the end of the month. So that gives us a total of $2.46, bringing their total dividends up to $4.36. We get a return on investment of negative 0.91%. Factor in all those dividends though, and we get a total return of 1.50%. They have a nice looking yield of 7.015%, and it is a monthly dividend, so we're expecting to see those dividends again at the end of January. I do love these royalty stocks. So those are the ones we already held, and this month we are going to add another 2 positions. The first of the new stocks is RioCan with a ticker of REI.UN. We opened a position of 5 shares, so their average cost base starts at $17.31, and they get the exact same for the price. We don't have any data yet on them. We'll of course have that next month. They do have a yield of 5.80%, and they are a monthly dividend payer, and we're expecting to see dividends on January 8th. So we did buy these just before the ex-dividend date, just so we could snag those January dividends. REITs are primed for some good growth later this year and into next, so it makes sense to prepare for some of that future total return goodness. I also opened a position in the Purpose High Yield Bitcoin ETF with a ticker of BTCY. I started off with 23 shares. They have an average cost base of $4.83, same price. No data yet. Their yield, though, looks pretty good at 9.182%, and it's a monthly yield. Their next dividends are also coming in pretty soon, January 8th. I did grab these in time to hit their ex-dividend date. Now, Bitcoin is going to have a very good year in 2024, and this is a way to tap into some of that success with some monthly income and the potential for some great growth. Let's take a quick look at all of them together so we can see that portfolio beginning to take shape. You will notice that for the $3,000 currently invested, the portfolio currently has a market value of $3,107.07, which is not too shabby for sure. In addition, I do have $9.94 in cash from some of those late month dividends, so the $3,000 portfolio is currently sitting at $3,117.01. Let's take a quick look at the portfolio's diversification. Using Blossom, we can get a diversification breakdown. I do try to limit each sector to a maximum of 20%. So once again, we do have 2 sectors so we bid on the heavy side, which are financials at 27.7% and industrials at 22.3%. Energy did shrink down a little bit, back down to 13%. We also have materials at 9.6%, consumer cyclical at 9.2%, technology at 5.9%, and utilities at 5.8%. Real estate, though, they made a big jump up to 3.4% thanks to that addition of RioCan. Healthcare came in at 1.9%, consumer staples at 0.9%, and communications finishing up the batch at 0.2%. Next month's selections will absolutely be taking these numbers into consideration as I try to balance these a little bit more towards my liking. The second number in orange is the average across all Blossom users, so you can see how far I am off from some of those Blossom averages. It is time to look at the toad and the goat of the portfolio for the last month. The infamous Toad Award for our worst performer of the month has a new stock taking the leap of shame. Last month's newcomer Alvo Petro finished December down an embarrassing 18.42%. Well, let's hope they can do better this coming month. And now for the GOAT. And this month, we once again have a brand new GOAT. Brookfield Asset Management had an absolutely stunning December. They were unmatched. They finished the month with a nice looking 18.86%, beating open text by a full 6%. Let's see if they can keep that title in January. So that is our update for this month, and we will be back here again next month to do it all over again. I sure am looking forward to buying the next batch. As usual, if you are interested in any of the stocks in this challenge, don't forget to put in a whole heaping helping of due diligence before you place any of your hard-earned money on the table. Keep the learning going. Watch my video on investing as a career, linked over there on the left, or test YouTube's recommendation skills by checking out the video on the right. Your choice will decide the winner, and I will see you in the next video.